Good morning and welcome to the market forecast. Finally, Friday, July the 16th. John Hoagland, as always, thanks for trusting me with your time and joining me this morning for the market forecast. As always, we're going to be looking at these markets, seeking accurate context, good risk management, and always exercising good patience. If you're already in the markets this morning, hopefully you've got things going your direction. We've had some interesting opportunities, perhaps some smaller opportunities this morning. We did have the retail sales numbers come out at 7:30, a little bit better than they were expecting. There was a revision from the last release to the downside a little bit, but overall, still a positive number. Apparently, inflation not keeping people away from purchasing products. Maybe that's a good thing. Maybe they are going to be right that inflation pressures may be transitory. We're still waiting for 9 o'clock this morning, Central Time, business inventories, and the Michigan consumer sentiment due out at 9 o'clock. And that's really going to do it. Noon, of course, we've got the Baker Hughes rig count for you crude traders. Crude kind of waiting for new information, it seems. We will be trading September today. Hopefully, you've already made that change on your platforms. If you have not, you should probably do so. The volume is much greater today in the September contract than in the August contract. And the end of a big week in economic data and Fed speak. Glad it's Friday. U.S. equity futures higher early here today, trying to fight off inflation fears, which have kind of come into play this week. We've had a little bit of a downturn overall in the U.S. equities markets. Inflation fears have really kind of dominated releases and speeches. Powell has stated that he remains optimistic that inflation will remain transitory. We're still waiting for information as far as crude pricing is concerned from OPEC. Apparently, they're going to be reporting some sort of an agreement shortly. It's saying that it's imminent in the news and everything. So we're going to be looking forward to that information. I think they're looking at at approximately a 400,000 barrel boost in crude production. Maybe that'll help quell some of the upside pressure that the crude prices have been on of recent. No major earnings today. We are looking forward to a busy week of earnings next week. The FANG stocks mostly set to release next week. So it's going to be always another fascinating and challenging week next week. And looking at the VIX this morning, down about 4%, 1631. Dollar index up slightly, 92.68. And the 10-year yield continues to slip to the downside. It's actually up a little bit from the close from yesterday, but down at 1.33%. As always, you want to have a good day today, hit the like button, hit that lucky like button. Always share, comment, question, feedback, and heckle at will. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. And I got to say good morning to everybody. Tone, first in the room, you win the prize, Tone. Theo, good to see you. York, Brian, James, Suzanne Fairley. Kind of a new name I haven't seen before, I don't think. Welcome to the Market Forecast, Suzanne. We're glad you're here. Cesar, Nico, Zarain, Kevin, Laura McLaren. I feel like I should know you by now, Laura, I should say. John S., anyone else having issues with the platform loading? I did not. I've got several platforms running this morning and I didn't have any problems with it loading. If you continue to have issues, make sure you contact our excellent support staff. Jerry is awake, and hopefully John is too. PK, good morning. Greg H., congratulations on reaching a level of success that you apparently reached yesterday, and thank you very much for the kind words on the email that you sent me. It was very nice of you. It's all about you. You did this, and if I had a hand in it, great. But you should feel good and feel proud of the level of success that you recently reached. Just keep on keeping on. Keep with the program. Keep with the platform. Keep with the process that got you to this level of success. And we'll see you continue that level of success. And again, thank you very much for the kind email. Keith, good morning. Jose, drones over Texas. Good morning. Harry Gordon, good morning. Nice to see you. Micah, good to see you. Rob T. Jason, Scott, Dustin Lindsay, and Frederico. I see a few new names here. Glad to see you. We're going to be looking at these charts in context. As always, we're looking at crude, the E-mini S&P, and the E-mini S&P, the Nasdaq, gold, a look into the currencies, into the euro, and one look into the treasuries in the 10-year. Good morning, Prophet Eon. Good to see you. Tony Shambrish. Well, he's seen some new names here. It's really good to see, and of course, a big welcome to the usual watchers of the market forecast and the market recap. Good morning, George and KM. All right. Good morning, Mario and Beetlejuice. Good morning. That's a good name for us. I'm not going to say that one 3 times. I remember what happens when that happens. All right. I usually have enough gremlins in my computers. Good morning, Janus. Some new names here. This is really good to see. We're going to try and do a good job for you here and putting some sort of context into these markets. And we are going to jump in as we speak. Let me get set up here. Make sure I'm in September here in the crude oil. And let's dive in. Can't say it 3 times. Can't say it 3 times. Can't do it. All right. Into the charts now this morning. Crude oil. We've seen some pressures. We are at risk of breaking market state here. This trend line I'm looking at is kind of a fine line. We've had one break below weekly kickoff low. Weekly kickoff low is now, with the adjustment to the discount from August to September, is $72. 72.01 is our overnight high. We're seeing some rejection, or some resistance, I should say, at that level. And again, these when we have the trend line crossing a weekly kickoff level, and that is the day when the market starts to break market state, you tend to pay a little bit more attention to those. We lost 50,000 in open interest yesterday on this move to the downside. Some long liquidation and again, some expiration coming. So a lot of folks just bailing out of that August contract. But this open interest is not only dropping in the August contract, it dropped in the September contract. So it's telling me that we're getting a little bit nervous as far as longs are concerned. I think this was a little bit of a long liquidation, maybe some late to the party longs getting out, maybe some longs from lower levels just deciding to adjust inventory in case there is some sort of surprise here from OPEC. They decide they're going to boost production more. That could be another price pressure to the downside. It really does seem to be awaiting that news, and apparently that news is imminent. They've been arguing for a couple of weeks now, and we've been waiting for that information. So looking into the 30-minute chart, we've got the market really kind of range bound here as far as, inside the value area from yesterday. Weekly kickoff low, was supportive. Has been resistant, has been tested, has been rejected, has been tested again, seems to be rejected again. There's no real inventory as far as overnight is concerned. No change in the perception of value of a barrel of crude oil. I'm going to stay patient today. The market is inside value. Looks as though we may have left the opening range at the high of the session, but I'm kind of... I don't put that much weight in that because the market really opened at the fairest price from yesterday. That point of control from yesterday really just kind of showing, all right, well, we're still seeing if there's any business to do there. I'll be watching to see the extremes. Of course, weekly kickoff low. It's been resistant a couple of times already today. If we get the opportunity, it's a good opportunity again to limit your risk. But as long as we stay in range and in value, I'm going to be really patient and wait for something to come to me during the session today. I don't want to go looking for trades because I'm here to trade and I have to trade. I want to take trades that are good, well thought out, good opportunities with limited risk. So I'm going to be focusing really on the overnight extremes, low from yesterday, value low, and settlement might also be something that might be an interesting opportunity. It's all about managing risk, especially when the market opens in range and in value. Take a look at the E-mini S&Ps. Fascinating markets. Fascinating markets. We know that this market has been making new highs and new highs and new highs. And, we pointed out 2 days ago that we had a bearish engulfing pattern. Well, we had a bearish engulfing pattern here too. These markets are extremely resilient. We've been talking about the fact that the upside was really kind of struggling. So we've had a bit of a pullback for the last couple of days. We've seen the market trying to push to the downside. Now the question is, how good of a job has it really been doing pushing to the downside? There's something I want to show you on the 30-minute chart here very shortly. So we saw the upside auction suffering a little bit. We were looking for this market to really kind of find a pullback, a way to even out the inventory that we think may be getting too long up here. And did we do that? Is this far enough of a pullback for us to do that is yet to be known. However, when we look at the 30-minute chart, this may be difficult for everybody to see, and I apologize for that, but here's that weekly kickoff, 4360, very magnetic. Okay, every day this week we've had some play with that level. Here it was near the high. Here it was near the low. Here it was near the low. Here it was near the low. Yesterday it was the high, and now we're breaking out above it. What I'm looking at is the activity that we had in the market yesterday. Now I'm going to make this as big as I can. When we start thinking about accumulation is usually, of course, going to be a longer time frame activity. Longer time frame traders are holding bigger positions, and they're going to be the ones that are doing the accumulation. Now, if I can do this right, during the first half of the session yesterday, we had Delta going from, let's say, about 12,500, and Delta kept getting more and more negative. There were aggressive sellers. So let's say here, 12,500. By the time we had this little capitulation to the downside, we had about 12,000 negative Delta. Delta is quite simply the number of contracts that trade on the bid minus the number of contracts that it's the number of contracts that trade on the offer is positive delta, minus the number of contracts that trade on the bid is negative delta. So we had a lot of aggressive traders selling into this market, then they were really kind of unable to push price lower. That can be a signal that you're seeing an accumulation in longer time frame, bigger money just coming up and soaking up everything that the short time frame traders will give them. They left the building at one point, but we ran out of selling power in the short time frame, and we came back and we basically closed right back at point of control. So when we're thinking about what our competitors are doing, if we had an event yesterday where longer time frame traders were accumulating new longs, we would look for a jump in open interest, which we do see. We see a jump of 27,000 in open interest just yesterday. Is that a big number? Debatable, but it does support the fact that we saw a delta divergence at one point yesterday, and that there was probably an accumulation, and that accumulation was probably in longer time frames. So what we're seeing here is we've pulled back a little bit. Now we've seen the longer time frame buyers come into the market, and now we're starting to see some of the shorter time frame traders that may be holding shorts running for the hills. It's already happening. So the 4360 level, if it's approached again today, I would look at that as a support level. There's probably going to be a lot of questions about Delta. Come to next Wednesday's group coaching session, and we're going to be expanding some of those as well in coming weeks. So we're looking at a situation where the longer time frame has the short time frame and medium time frame speculators perhaps a little short in the hole here, and that's why we've got this market running to the upside. Is there a question as to whether we're going to open with a gap? I think we've probably answered that question. Do we have some overnight longs? We may, but we may also be holding some shorts from all week. Okay, we've seen the market, we've seen value come lower a couple of times. How short are we is really the question. It's going to be a challenging trading day. If we can't close this gap, if we can't get down to this weekly kickoff level or the high from yesterday, that's important information. What doesn't happen is equally as important as what does. All right. Now, Nasdaq. Oh, one other thing. On the daily, I didn't put it on here, but we're looking like a bull flag here. And if this is a bull flag and we break out above this trend line, which looks like we're working on doing now, that means more continuation to the upside. So even with the bearish engulfing patterns, the market can be kind of showing that it needs a little bit of a rest to the upside, gave us a little bit of a rest from the upside. Now it looks like it is primed for continuation to the upside. Bull flag. Look at the Nasdaq. This one I actually put it on. Bull flag. We haven't broken any structure to the upside. We've been riding the center line here in the Nasdaq for 2-3 months. Is this enough of a pullback for the market to continue this move to the upside? We did not see the same kind of accumulation that we did in the S&Ps. We lost about 300 in open interest on this push to the downside. At the very least, it indicates that there was not an increase in open interest on a down move. Money was not coming in to the short side on this move to the downside. So we're still not at risk of breaking any kind of upside structure. No new sellers came into this yesterday. We did not attract them. Bull flag? Upside structure? 30-minute chart. Okay. Settlement is here, 14,787.50. 14,87.50 is settlement. We are starting to perhaps getting a little bit long above that, but these markets are extremely resilient. If the S&Ps start heading that way, we know we've got a lot of FANG stocks coming out, earnings coming out next week. But if we've gotten too short here in the hole and short time frame, that's what's going to happen. If we break out the top side of the bull flag, then we may see this market finally get up and actually touch 15,000. It's been so close, and yet so far we're still in range. Not going to open with a gap. Keep that in mind. Gold. So medium time frame structure is good. We've got this low here. We've been basically one time framing higher ever since. We lost 3,500 in open interest up against a resistance level. It makes sense. Volume was off a little bit. It makes sense. Continuation, I think, is going to require new participants to the auction process. If all of our participants are already in, we're going to see a pullback. If we can push above weekly kickoff high and attract new business, new buyers, I think that it's going to take some pretty decent energy to do so. But if it happens, there's plenty of space up above for this market to continue its move to the upside. Okay, new participants and a lot of energy, but if they do come in, we don't want to stand in front of it. 30-minute chart. Overnight shorts. Settlements all the way up here, 18.29 even. A lot of overnight shorts. A huge opening range this morning. It's like a 40 tick opening range. It initially was the low of the session, but you can see that it did take out the low of the opening range, but is now continuing the move to the upside. We still got too short in the hole. We did not see sellers come in below that opening range. The overnight shorts getting nervous, bringing price back to quite possibly all the way back to settlement. It would sure be a lot of fun if we were long down here to see this market rotate all the way back to the weekly high, our weekly high this week, this 1835 weekly kickoff high. Going to happen? Who knows? It seems to be headed that way, at least for now. And any hypothesis that you have for trading is always at risk of headline changes. Somebody says, something comes out in the news, can change everything. So remember to always use stops. Okay, the euro, not that fascinating. A downside structure remains. We added 2,800 on the open interest on this move to retest weekly kickoff low. It's been kind of run through a little bit this week. I'm not looking at it as a really important level, although it may be somewhat pivotal. Volume was pretty low yesterday. Open interest, we added 2,800 on a continuation or an attempted down day. 30-minute chart. No gap. 1816 is weekly kickoff low. That should be up a little bit up here. No gap, in range, in value, no overnight inventory. That's why I'm saying this market does not look all that interesting for us today. I'm going to keep this on the back burner. Should something change and I notice it, I'll be ready for it. But I don't see that it's anything that it's important to get into early in the session today. Watch the extremes. Watch the extremes. And now, the 10-year. Lower volume the last couple of sessions. We did add 2,800 in open interest on this attempted push to the upside. We've still got space to weekly kickoff high. We've got space to weekly kickoff low. I'm looking at this as a market that is largely in short time frame control, so short time frame levels are likely to be respected. Which ones? We don't know. The increase in open interest we lost open interest on this move to the upside. I apologize. I'm looking at the wrong thing. We lost approximately 13,000 in open interest, which is not a big change in open interest in the 10-year, but it does indicate on lower volume that the upside auction may be starting to get a little bit tired. You know, we have not this week yet had a test of weekly kickoff high. That's important information. Rates kind of slipped yesterday, up a little bit today, so the market really just kind of following rates as it always does. But again, I think it's in kind of a short time frame control situation, largely range bound. So settlement is all the way up here. So we are holding some overnight shorts. If the overnight shorts can't continue this market past the low of yesterday, past perhaps this point of control here, which remains unchecked, we may see these overnight shorts get a little bit nervous and bring price back, at least in the direction of settlement. So really what I'm looking at here is in the regular trading hour session, are we rejecting value from yesterday? It would appear so. But we've got to, see if we find some support level down below that, because again, we have those overnight shorts that may need to bail at some point today. After all, it is Friday. All right, so I've got a couple of questions here. Good morning, John. Januz. John. Thank you, Drones. Good morning, Vince. Ange. Not so consistent bifocal lens. Mr. Shine's Mystery Channel. April, one question. What do you think about trading micros once I'm funded? I'm thinking about taking the pro account and building the first 5,000 with micros in order to manage risk. I don't think that it's a bad idea. When you're getting into a new account or starting a new account, what really impresses me is the ability to be consistent and profitable and ratchet that balance up over time. Anybody can push the button and put a maximum position on and get lucky and have a big winning day. You want to impress me, April? Be consistent and profitable in whatever you're doing. It's, you can get lucky, or you can, blow your account if you over leverage. So I like your idea, April. And, with the people that I work with, my goal for them is to get to a level of ability, whatever it is, a strategy, whatever it is that gets them to be able to maintain an account forever, stay in an account, grow it over time. That buys you time to get better at knowing how markets work, and even more important, how we work, how April works. Very important to know that. Dustin, the open interest, I'm going to put it in to the chat room here. This is the daily bulletin from the CME. All of the information of all of the products of the CME group are in this. So if you're looking for, let's say, equities, go to equity index. It's page 11. You'll see S&Ps at the top. You always make sure that you're looking at the freshest information. Before about 9 o'clock, it's going to say preliminary. Make sure you check the date. And then if you're going to be collecting that information, make sure you wait till after 9 o'clock. Refresh the page. When it says final, that's your actual open interest. You can also see it on some platforms, but it's only going to be showing you the front month open interest. And in a market that rolls over every month like crude oil, it's going to be skewed. Get the total, all of the open interest of all of the available contract months, and I think you'll get better information from that. Okay. Good morning, Ankh. All right. Got a little long-winded. Our equities just opened up. Take your deep breath. Stay humble, grateful, and creative today. Have a good weekend. Get some rest. Do something nice for yourself. Do something nice for somebody else. Stay kind and happy, and because happy people make better traders. Get out there and profit today. No recap today being Friday, but I'll be back Monday morning with you on the market forecast, 8 a.m. Central. Same bad time, same bad channel. Trade well today.